Hey guys, it's Steven from StockWarrantsHQ.com. I wanted to put together a video to show you how I've traded the AIG warrants for the past 7-8 months. I did a post last week on December 4th talking about how I've traded this. I want to show you 3 things I use to trade the warrants here. This is a chart of AIG, the common stock. And whenever I'm trading a warrant, I'm using the chart of the common stock to tell me when to buy and sell the warrant. So if you throw up a chart of the AIG warrants, you'll see that it pretty much matches this chart. It's just at a lower price point. The warrants are trading around $11 to $12, where the stock's trading around $51 to $52. So as I said in the post, you get a lot more leverage by trading the warrants as opposed to trading the stocks. But again, you want to use the chart for the common stock as opposed to the warrants. So the 3 things I want to talk about are support and resistance, the candlestick patterns, and the MACD. The first thing I noticed with AIG was that last year, I'll scroll back on the chart here, the stock traded in a range of around 52 to 56 for several months. And I talk about this in the post from last week. So this gave me an idea of what to expect when the stock traded back up to this range after recovering from a dip at the end of last year. So as we zoom back in, we can see that it pretty much matches the range from last year. So you could buy at around the 51 to just over 52 level and sell anywhere in the 55 to it traded up to 58 at the high. So we had a pretty well-defined area of support and resistance that we could use to get long the warrants and either trade against the warrants by shorting common or shorting calls against the warrants. Or if you wanted to, you could just buy the warrants and sell the warrants in this range. So I was looking to buy the warrants around the $11 to $12, which again equates to the 51 to 52 price point here, and then make anywhere from $2 to $4 on each trade in the warrants. So the first thing I used was a trading range. And again, you could identify the range relatively early given how the stock traded last year. The second thing I used was candlestick indicators. Each one of these points represents a bullish engulfing pattern on the chart. So I'm not going to go in depth on what a bullish engulfing pattern is, but basically you need a downtrend followed by a red candlestick, which is a down day, and the next day is a green candlestick or an up day that engulfs or basically is larger than the previous down day. I'm taking a little bit of liberty with some of these because they're not exactly bullish engulfing patterns. Like this second one, it doesn't engulf the full body of the first candlestick. But if you understand what's behind the candlestick and why it's important to see the bullish engulfing pattern, then for me, that's close enough. So here we have a bullish engulfing pattern, the first one. The second one took place in June. We have another bullish engulfing pattern in August, another one in September. You can combine 2 candlesticks into one to get to your pattern. And then we have another bullish engulfing pattern or close to it in October. And what we'll talk about at the end of the video here is we have another bullish engulfing pattern forming right now, assuming that this is how the pattern ends today. Another piece, and again, I don't want to get too far into the technicals of candlesticks at this point, but this is a shooting star candlestick here, followed by a bearish engulfing pattern, which is negative. And that tells you, again, you're at the top of the range, which again, you could look at the pattern from last year to get to this. So I was looking to buy when the stock was in the 51 to just over $52 range, sell again $2 to $4 up. And a couple of things that I used to tell me that it was okay to sell or even get overly short, which I was a couple of times by way of shorting the stock and shorting call options, was by using some of the candlestick patterns to tell me that the stock was ready to turn. Again, here We had a shooting star, which turned into a bearish engulfing pattern. Here we had a doji, which indicated, again, you're at the top of a range, which we knew from the range that we're in. So a combination of the range itself combined with the candlestick patterns really helped out with my trading here. I want to turn to the MACD now. And the MACD, which I like to use, it's one of my favorite technical indicators, told me not to worry about the stock breaking out at this point. Again, I was overly short in this range in July because the MACD was actually trending down. I'll put in a quick trend line here. The MACD was trending down while the stock was trending up. That's called a negative divergence. So if your indicator is telling you that the stock should be moving down while it's moving up, you've got a negative divergence there. And again, I'm not going to go too far into that, but what that tells me is that I'm not too worried about the stock continuing to move higher at that point. Generally, the MACD moves with AIG pretty well, and as you can see, there are a couple of buy points that matched up with the bullish engulfing patterns. Here in September, you had a buy point in the MACD when it crossed over. Here in October, you also had a buy point with the MACD a couple of days after the bullish engulfing pattern. Here you can see it matched up. The low in the MACD pretty much matched up with the low in the stock. And now we've got the MACD today looking as if it wants to turn higher. So the MACD wasn't as important in this trade as the support resistance lines and the candlestick patterns, but I always like to keep an eye on it to see what it's telling me about the stock. And speaking of the MACD and the trade today, so let's move from what I've been doing the past 7 or 8 months to what the chart is telling us right now. So first of all, we can look at the range, and I'll draw in a quick trend line here. And this tells us we're at the bottom of the range at this point. So that's our first indication that we're at a buy level. The second piece is what I talked about a couple of minutes ago. Right now, if we finish today, which is December 12th, if we finish today with this candlestick, and I'll zoom in a little bit, we're looking at a bullish engulfing pattern again. So we have the large green candlestick engulfing the red candlestick from yesterday. I'm going to zoom back out. And now we have the MACD on the daily chart has not yet crossed to a buy, but what I like to do is look at a 30-minute MACD as well as an hourly MACD to see where the stock may be headed. So if we look at the 30-minute MACD, we see that it crossed to a buy on the 11th, which is yesterday. And one of the things I like about this MACD pattern is that if you look at the trend, you have a MACD, just like we had the negative divergence before, which told us we might have a top or that the stock wasn't quite as strong as it looked. We have a positive divergence in the MACD. So we have the MACD on a 30-minute chart moving higher and making a higher low, while we have the stock basically putting in close to a double bottom on the 30-minute chart. So that's a positive for the stock moving higher. And then if we look at the hourly, we have the same pattern taking place. So we have, again, a positive divergence as the MACD moves higher while the stock has basically moved to the same low. So again, to me, that's a positive indicator in the MACD. Obviously, it went to a buy at this level. The stock moved up a little bit to break through 52 and then came back in. And now the MACD has crossed again on the hourly chart. So we're just waiting for it to cross on the daily chart to give the indicator. I'm long the warrants, which I've been buying the past couple of days. And going back to the daily chart, I'm looking for the stock to move out of the low end of the range back up to, at a minimum, the 52 level, and possibly back up through the 54 and maybe even to the 56 level again, which will mark the 6th time that the bullish engulfing pattern turns out to be correct. And as I said in the post from last week, if you're using the warrant, you get a lot more leverage. So where you could have gotten, I believe it was around a little over 20% return on the common stock, that would have been around 100% return on the warrant. And again, I use calls as a shorting mechanism against the warrant when it reached the higher levels of the range, in addition to shorting stock. And one additional trade that I used was actually to do put and call credit spreads when the stock was trading either at the low end of the range or the high end of the range. Right now I have on a put spread in the weeklies that I put on last week, and I just put on an additional put spread today. So given the range, the candlestick pattern, the turning of the MACD to a positive on both the 30-minute and the hourly chart, it looks like the stock is going to move higher again, back into the range from this low end of the range. And that's the way I'm positioned right now. From a stop loss perspective, if the stock breaks through the 50 level for me, that's when I'm either going to exit my warrant position or put on a fully hedged position with the warrants and the common by shorting the common stock against my warrants. Again, I'm using what happened last year when the stock broke through those levels and quickly moved much lower. If you'll remember, this was a time when Chairman Powell was talking about raising interest rates and how the Fed would be going into a cycle of raising rates, which obviously changed. And now that's another factor in the stock moving higher, meaning a stable interest rate environment, as opposed to the market not knowing exactly where interest rates are going. So that's how I've traded the AIG warrants since May of this year, and what I think the warrants and the stock are poised to do over the next couple of days, couple of weeks. I hope that's helpful. And you can always check out my posts at stockwarrantshq.com. Again, I put up a post last week about this exact thing. This is just a more detailed video of what I've been doing and the indicators that I've been using to enter and exit my position. Again, this is Stephen Adams, and good luck in your trading. Thanks for watching the video.